Welcome to the Financing Simplified podcast. This is our first episode brought to you by InTouch Mortgage Solutions. I'm joined today with my brother Claudio Venuto, but before I get in there, I'm going to introduce myself. My name is Anthony Venuto. I am a mortgage broker as well, and together we are here in Kleinburg, a little town in the middle of Vaughan, and obviously in the GTA. Here we get to see a lot of different walks of life, different types of mortgages, and I want to get into a topic that's very important. Obviously, financing being the forerunner right now, especially with the Bank of Canada increasing rates, and a lot of people feeling those pressures from higher cost of borrowing. And I want to lob this question over to you, Claudio. What do you see happening right now in the industry right now when you're looking at mortgage underwriting?
Oh, there's a lot in the industry happening right now. It's kind of hard to pinpoint one thing, but as an underwriter, as a broker, what we're seeing a lot right now is the difficulty of qualifying. People that are looking to still get into the market that haven't over the past 2 years over COVID. We've seen the market kind of skyrocket with home prices, and now even with the rates increasing and prices, kind of cooling off, people are still having trouble qualifying.
Yeah, absolutely. He's 100% right. He's spot on with the qualifications right now. Home prices have come off their highs, obviously, from a few years ago, but they're starting to come back up with the lack of inventory. And what I find happening right now is a lot of people that got sidelined, who decided to take some time off from purchasing homes, maybe during 2022, when the Bank of Canada was on a rampage, increasing policy rate, obviously making things more expensive. That was the sort of the TSN turning point for a lot of people. But then as soon as the Bank of Canada began to signal that they were going to pause, they were going to hit this elusive pause button, that sort of drove a lot of pressure back to these first-time home buyers, millennial buyers, and a lot of these new-to-Canada individuals. And like you said, we were talking about income qualification, and now with the higher rates, people qualifying, it's a huge chunk off of how much money they can qualify for when it comes to the prices. Like, they haven't come down, especially in Vaughan and the GTA. Things are still relatively expensive. Obviously, if you're looking outside of 2-3 hour drive from Toronto, yeah, you can still find some affordable housing, but it's basically still very expensive in the major pockets like Vancouver and Toronto. Well, that is the $1 million question. Why are home prices at the levels they're at right now? And there's a lot of different reasons, a lot of different speculations on why that is. And if you ask me, and something we've been talking about, something I've been an advocate for a long, long time, is the building. They're just not building enough homes. They're not building enough of the right homes. And if you think about Vaughan, to your point, why is the GTA so desirable? I think it is a safe spot. I think a lot of people feel safer, depending on your background. You want to stay closer to family, especially if you're in the Eurocentric, let's say the European style family. You want to be as close. I mean, Vaughan, GTA area. That's going to be your go-to point. That is the major reason why I think Vaughan, especially here at Kleinburg, a lot of people want to live in the area. Like you mentioned, the schools. And obviously the styles of homes. I think this is what is, if you move out of Toronto, right, you're not seeing that missing middle area. Like Toronto, you either have those townhouses, you have those duplexes, you have what are they called? Oh my God, the semis. I couldn't even think of the word right there. But there existing inventory. At least when you drive a little bit north of the city, they're going to be starting to produce more of these homes, but they're just not building enough homes to meet the existing demand prior to the federal government bringing in all this new immigration, right? Which, make it very clear, immigration, we need it. We need to replace the aging population that is retiring very quickly. But with that aging population retiring, leading off, who's replacing the working force to still build these homes and build them at a better price?
No, and I don't think it's going to be possible to build houses at a cheaper price with all labor markets increasing. Your general trades, electricians, plumbers, they've all got pretty hefty increases in their regular wages. So as a builder, how do you hire trades at a lower cost. We can't. There's a standard now, right? And without those trades coming in, and the price of lumber, the price of material also going skyrocketing just through COVID, we've seen it's going to be a lot harder for new developers and home builders to build a cheaper home. And now we're starting to see, maybe some affordable housing. So I think we're even stepping away from the single detached homes. We're not going to be seeing many of those built anymore. And I think that's another reason why price is increasing, right? Because the hottest property is a single car detached home for a small family, even a new family, even with a family with one or two kids. A 3-bedroom single car detached is going to be what everyone wants, and unfortunately they're not building those anymore like they used to.
You're 100% right. They're not building those homes anymore. And that, for some people, like you look at, let's say, our parents' generation, where they were able to purchase a home, right out of the gate, they were able to purchase a single family home. Now the starting entry point or the barrier to entry is a condo for a lot of these individuals. And you touched on the building, right? Obviously, it's not even the cost of material, the labor. Everyone's got an increase over as the cost of living gone up. A lot of these companies increase the wages for their employees. We talk to plumbers and electricians. You'll talk to HVAC guys, insulators. All these guys had received an increase in their pay, which obviously in turn costs the builder more because they have to now tender these trades at a higher price. But let's not forget one other thing too. How are they going to build a home cheaper if interest rates are higher?
Yeah.
The cost for these developers, unless they own the land, to maintain, the actual mortgage payments on that land, they have to pay for it. And then the cost to develop, the cost to acquire, the amount of time it takes for them to actually put a shovel in the ground, what it's costing. We were talking about it not too long ago, was that around 31 or 33% of a new home construction is all derived through taxes. So the cost of that actual home, the majority of it, 33% of it, is actually driven by taxes. It's crazy. It's absolutely insane.
Especially young kids my age, it's hard for them to get started, to be able to jump into the market at a first time. You look at the condo market, yeah, that's most likely where you're going to end up, especially even if you have $200,000 in down payment. It's also your income, and you need a minimum of like 140,000 of combined income to qualify for a purchase price of 800 to 900,000. So if you don't have that, then you have to increase your down payment. So now your 200,000 doesn't really say that much, right? So we're seeing a lot of people coming with help from family, bank of mom and dad, but unfortunately, not everyone has that help, right? So we can look at putting on a co-signer, putting on a guarantor, adding strength at the application to help them qualify. But sometimes people just don't have that help, and that's where they get stuck.
A lot of these young individuals who are coming to the market or trying to buy even a condo or something around $1 million mark, they're missing either the down payment or the income, and we're having to add the parents, the co-signer, the guarantor. And a lot of people are coming to the table with that particular set of assistance, whether, Bank of Mom and Dad is not only for the down payment, but we're seeing them jump on board as that co-signer guarantor, which there is a difference. A lot of them have to understand the differences between a guarantor and a co-signer. Guarantor means, you're just on the actual mortgage versus someone who's co-signing who's not only on the title, but they're also on the mortgage and the implications that could have. And a lot of times having that conversation with the parents may deter them. They may come up with a little bit more money to help the kids so they don't have to jump on the deal. But I think it's the qualification. It's literally with the higher interest rates right now, a lot of individuals are finding it much more challenging. Even though with an insured mortgage, if you're buying less than 20% down, you do get the benefit of that slightly a little bit lower rate. But now you're qualifying at a max amortization of 25 years, right? And there's no GDS or TDS ratio exception, which is basically gross debt servicing or total debt servicing ratios. For those viewers that may not be familiar with that, it is the one metric, I should say, that the lenders use to calculate their formula on if they're going to approve or decline your deal. And if you're insured and you're over these limits, good luck.
Yeah, and then you mentioned that, right? If you're trying to buy with less than 20% down, under $1 million, good luck finding that in Vaughan or in GTA. It's very difficult as well.
I find it's like I had a client call me the other day and they were saying, oh, we found a condo for like, it was listed for 500,000. I'm like, where's this condo for 500,000? Because I'll buy two of them, right?
Yeah.
Like it's just interesting. And it's also for them to understand, especially as a first time home buyer. And I think that's something that we do well at InTouch Mortgage Solutions is we take the client along the journey. We're not scared to talk to the client honestly and openly. Sometimes we'll hear it even with Enza, our principal broker, and our mother as well. You know, we're a family brokerage, but we'll get that, like, you know, you're like that figure that's helping me through the process. You know, you're giving me, I've learned more in that 15, 20-minute conversation than they did going to the bank several times.
Sure.
And it's explaining to them, saying, look, you know, I understand you're going through the process. You know, you're going to get lured in by these prices that you're seeing, but those are the list prices. What are the sale prices, right? And there's a distinction. A lot of people, and this is exactly what's happening in the marketplace right now, is they're seeing those prices, but they're not understanding that, you know, there's going to be a multiple offers. There's going to be bidding wars potentially as the market shifts. But most importantly, it's going in with a firm offer.
Yeah.
You know, like that's the other thing that we're talking about with pre-approvals with clients is we'll go back to the parents jumping on board. Even if the parents jump on board, there's an additional down payment. You know, if it's sub $1 million, you know, and they have the backup, can they go into a firm offer versus the young couple that's coming to the table with, you know, savings that they've put together through working really hard, and then their income, but just barely able to qualify, not being able to go into that firm offer and being disheartened and being deflated because they're losing out. They're like, they won't even, like someone who's sold and bought multiple homes.
Yeah.
When you're sitting in the position where you're selling your house, you don't want an offer that's not firm.
Yeah.
You want a firm offer.
Yeah. So here at InTouch, the goal is, you know, is to be real, right? Our clients, we want to be real. We want to be that person that they're going to listen to. And even if we can't help you get qualified, there's always a how, right? It's finding the right solutions to get you approved for a mortgage, whether it's with a bank, with an alternative lender. There's always the right solution for you out there.
Yeah, absolutely. I think that's the key touch point for InTouch. How we help our clients is that we've helped clients position themselves. Starting that journey is understanding where you need to be and how to get there. And a lot of people, a lot of first-time home buyers, I know there's a lot of information that's available online. But speaking to a professional who, you know, specializes in mortgages can help you build that roadmap to success. And that's what we find helping clients is understanding what they need to qualify, how they need to get there, what they need to do. Trust me, there's blemish credit. There's all kinds of issues that people need to overcome. And if they don't know where to start, the journey just gets a little bit more challenging down the road. So that's something that we really take pride in here at InTouch Mortgage Solutions.
Definitely.
If you like what you're hearing, what you're seeing on our Financing Simplified podcast, please don't forget to share, subscribe to the channel, and you can follow us for more content on our social media feeds in the description box below. But until next week, we'll see you again. Thanks for clicking and thanks for watching.